Today, Bitcoin rises while Ether falls as investors make sense of the latest U.S. jobs report and new economic data. Multiple states consider creating strategic Bitcoin reserves. And Hoolie Tejwani of Coinbase Ventures talks about the sentiment among crypto startups under the U.S.'s changing crypto regulatory environment. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto markets are mixed as we head into the weekend and as investors digest the latest U.S. jobs data that showed the pace of hiring was weaker than expected in January. Now, at the same time, new economic data showed consumers grew dramatically more concerned about inflation as President Trump pushed aggressive tariffs. As of noon Eastern, Bitcoin had risen about 1.3%, trading at the $97,000 level. Ether was down 0.5% though and traded at $26.93. Dogecoin, meanwhile, was on the rise, gaining roughly 2.5%. But looking at the week, major crypto assets were in the red across the board, while the S&P 500 was little changed. Bitcoin fell nearly 4%, while Ether and Doge tumbled 19% and 22% respectively. Now, over on Wall Street, crypto proxy Strategy is closing the week on pace to add less than 1% after reporting a rebrand, but also a miss on revenue in the fourth quarter. Coinbase fell 5% and Bitcoin miners were mixed. Mara Holdings dropped 5.5%, while CleanSpark jumped 11.7%. And that's all as of noon Eastern today. Okay, let's talk about the top stories. Crypto exchange Gemini is reportedly considering an IPO. That's according to Bloomberg, which cites people familiar with the matter who say that the debut on public markets could come as early as this year. The report notes that no final decision has been made. This comes as crypto firms are turning their attention back to the U.S. thanks to a pro-crypto Congress and an embrace of the industry by Donald Trump. Now, Gemini was founded by the Winklevoss twins, who were major contributors to pro-Trump PACs during the campaign. We reached out to Gemini but didn't immediately hear back. Next, multiple U.S. states are advancing bills to add Bitcoin to their balance sheets. First, a Bitcoin reserve bill is officially headed to Utah's state Senate. This House voted in favor of the proposal on Thursday, 38-34, with 3 members absent. Meanwhile, in Missouri, Republican State Representative Ben Keatley introduced a bill yesterday to accept Bitcoin for state payments. The bill includes a minimum 5-year holding period, which then could be sold or even converted to another cryptocurrency. Representative Keatley argues that this would diversify Missouri's state portfolio and act as a hedge against inflation. Earlier this week, New Mexico also proposed a strategic Bitcoin reserve that would allow the state to invest up to 5% of public funds. And all of this, of course, comes amid conversations around a strategic stockpile at the federal level. In January, President Trump signed an executive order directing select regulators and government officials to evaluate the creation and maintenance of a stockpile from seized digital assets. Last, an update on this week's congressional hearings around debanking of firms engaging in crypto. After the Senate Banking Committee hearing on the matter, the House Financial Services Committee held its own, with testimony from Coinbase's Chief Legal Officer Paul Graywall and Mara's CEO Fred Thiel. Now, in his opening statement at the hearing, Thiel argued that digital asset firms were being excluded by banks and financial service providers in 2023 and 2024, and recommended that Congress prohibit what he calls blanket bans on digital asset companies, and instead require individual risk assessments. Now, Thiel also testified that Mara experienced financial exclusion that he says, quote, required burdensome workarounds in order for Mara to compete on a global stage. When speaking with CNBC Asia's Street Signs after his testimony, Thiel predicted that banks would custody and lend against crypto in 6 to 9 months, which he says would be bullish for the currency as companies would then allocate it to their balance sheets, further limiting its supply. All right, for our main story, I spoke with Hoolie Tejwani of Coinbase Ventures. He discusses how the changes in Washington regarding crypto regulation are changing sentiment among crypto startups. So we've seen a lot of positive momentum on the crypto front in Washington. Just this week, David Sachs chased the president's EO with the announcement of a bicameral working group comprised of committee leads from the House and Senate, a coalition that he said would really dig into creating new policy. Now, David talked about pushing for a stablecoin law first and then investigating the possibility of a national Bitcoin stockpile. What was your reaction to what we heard from the president's crypto czar this week? And do you agree with how they're prioritizing initiatives?
Thanks, Matt. Great to speak with you. Overall, I'd say we're incredibly optimistic about the more constructive tone in Washington around crypto and crypto regulation. What we've heard consistently over the past several years was a lot of frustration from the founders that we work with around lack of regulatory clarity. I think it was very clear that the previous administration's approach of regulation by enforcement lacked a seriousness of purpose around how to handle crypto, and it wasn't accomplishing anything it intended to. We were not protecting consumers from fraud and bad actors, and we were driving innovators who want to be compliant offshore. So overall, I think the tone in Washington is now much more constructive. There's a seriousness of thought around how to handle crypto, and founders are just looking for clear rules of the road. We want regulatory clarity to build and bring this technology and its benefits into the United States. So specific to the EO and Mr. Sachs' comments, do think that stablecoin legislation is a critical priority. There's a ton of benefit for U.S. firms and frankly, U.S. strategic interests for having a clear path to adopting stablecoins and pushing that forward. So overall, we're very optimistic about how things are unfolding.
So in his first press conference as the new White House AI and crypto czar, David Sachs also said that he had talked to many founders over the past few years and that they had repeatedly told him that the number one thing that they wanted from Washington was regulatory clarity, something that you say that you've been talking to a lot of your port co-founders about across the industry. And my question to you is, what do they want to see? Are they more keen for a crypto market infrastructure bill, for example, rather than stablecoin legislation?
Sure. I'd say it's all of the above. Like, look, crypto is a net new technology. It doesn't fit cleanly into 100-year-old boxes of definitions. There's going to need to be multiple bites at the apple to structure and form clear rules of the road. I think like a visceral example that David brought up, and Paul Gruhl, our chief legal officer, was in Washington yesterday testifying about an example here is debanking. So imagine you're a founder, you take the ultimate career and personal financial risk to start a company in a new technology field. You legally and compliantly raise startup capital from investors. You have a team that relies on you and is betting on your vision. You have customers that rely on your products. And then you wake up one day and your bank account is shut down with no reason, no recourse, no warning. That happened to many founders in our industry. And unlawful debanking is like an existential threat for entrepreneurship. So that's one area where just having clear rules of the road will help avoid this real deterrent to startup innovation.
Now, also this week, the SEC made a major shift in its approach to digital asset regulation. Under new leadership, the agency announced that it would open its doors to meetings with anyone interested in discussing crypto, an effort to show a clear contrast to former SEC Chair Gary Gensler, who really emerged as an antagonist to the industry. There's also Commissioner Peirce's new crypto task force. Do you see changes happening at the SEC almost eclipsing what's happening on Capitol Hill and with the new White House czar? Because to me, it seems like this is where the real change and impact has been taking root so far.
Again, I think it's all of the above. We'll need clear legislation to pass on stablecoins, market structure, a few different areas. But yes, reading the crypto task force announcement from Commissioner Peirce is incredibly optimistic. The approach in the past was not productive. Founders want to be able to engage, to inform, and have a regulator that's listening to what they're working on and providing clear guidance. As she outlined, it's going to be not an overnight change, but the path and the journey there is very constructive.
So overall, what I'm hearing from you is that we can expect more activity amongst crypto startups this year. How does that impact your investment strategy?
Yeah, so our approach has always been focused on talent and technology, and we take a very long-term view. We've invested consistently through the ups and the downs of crypto markets when it's in favor, out of favor within the zeitgeist. So I do think it's going to be a banner year for crypto startup formation and funding as these paths on regulatory clarity unlock. So I wouldn't say our strategy is really shifting, but the net of the setup is that more exceptional founders and talent will be coming to the space, and that's more opportunities for us to find them and back them.
So with the US taking a more proactive approach to crypto, how might this shift global competitive dynamics? And what advantages could US companies gain?
Sure. So we were at real risk in the US of falling behind on global crypto adoption and innovation until this recent tone shift. If you look at the data, it was very clear that the share of developers contributing to crypto was disproportionately shifting outside of the US to places like Asia, where you've got jurisdictions like Singapore, which have been much more front footed in creating constructive regulatory frameworks and tax incentives for builders. So one is keeping technical entrepreneurial talent focused in building onshore versus losing that abroad. And then the discussion around stablecoins is another great example. US firms who adopt stablecoins will be able to benefit from the efficiencies of the technology. And as stablecoin penetration continues, there's clear product market fit and demand for US dollar-backed programmable stablecoins that will also support broader US strategic interests around the strength of the dollar.
I know you mentioned that a more pro-crypto Washington would be a good thing with respect to recruiting fresh talent, but how are you thinking about your investment focus areas for 2025?
I'll give you some of the areas where we're spending a lot of time, and we're seeing some of those best and brightest minds getting obsessed with spending their nights and weekends. So one, we mentioned already, stablecoins. We're seeing an explosion of startups and quality founders who are working on different areas of the payment processing stack and pushing more stablecoin adoptions. We're spending a lot of time there. A second one, which we've spoken about before, is the intersection of crypto and AI. AI is changing everything. Crypto is no exception. We believe that we're moving to an AI agent economy, and crypto and on-chain rails are going to play a huge part of that. A third area we're spending a lot of time is the evolution of DeFi and decentralized finance. So an example would be one of our portfolio companies, Morpho, which we recently partnered with to bring on-chain borrow and lending capabilities to Coinbase users. We're going to see a lot more of these DeFi primitives be made much more easily accessible for mainstream users and showing up in everyday applications. And the last area is broadly on-chain consumer applications. So everything from prediction markets, gaming, loyalty, social, all the infrastructure primitives that we've been working on over the past several years are at a place where we can finally see some internet scale consumer applications. And there's a ton of building and experimentation happening there.
Okay, that's all for Crypto World this week, but we'll be back again on Monday, and we'll see you then.